Hello and welcome to the first episode of Wizards of Finance, brought to you by Mirae Asset Mutual Fund and CNBC TV18.com, an up close and personal investor education series with leading financial stalwarts sharing their insights on long term disciplined investment during market volatility. This investing series will aim to cover how to grow your wealth in these uncertain times, choosing the right investment that suits your goal, and how to diversify your investment portfolio using exchange traded funds or ETFs as they're called, to stay ahead of the investment game. I'm Anuj Singhal, and with me today we have
Swarup Mohanty, who is the CEO of Mirae Asset, and Siddharth Srivastava, Product Head ETF at Mirae Asset.
gentlemen. Thanks a lot for joining us on the show. Swarup, let me start with you. The ETF concept is picking up in India, right? But it's still nowhere near what the global average is. Globally, I believe it's upwards of a $6 trillion industry now.
Yes, Anuj, thank you for doing this for us. And yeah, I agree with you. We agree that ETFs are gaining a lot of attraction across the globe, and this is reflected in the AUM of ETFs, which you rightly pointed out. And it's grown by almost 5 trillion in the last decade to become around 6.6 trillion US dollars, which is almost twice the size of India's GDP. I think the simplicity of the product is what makes it more appealing. Apart from simplicity, you can't deny that it's a low cost product. It is tradable, and it's a very transparent portfolio. Along with being it enables the investor to take a focused approach, and the accessibility in terms of an investor across the globe. Say somebody sitting in the US wanting to invest in India, or say somebody from India wanting to invest in the global markets, makes it very attractive. See, globally today, ETFs are preferred route of investments. If somebody wants to say capture and get benefit from particular themes, and that's what is favored now. I think one of the biggest themes that work globally are the ESGs, the cloud computing. We have a very famous marijuana fund which works very well, and there is of course artificial intelligence working. So while it looks passive as the word, there is a lot of thinking in building products, and that is what is attracting people more and more as the times go by. And there is no denying the fact that the cost, along with all these benefits, has been a go-to product for investors in the recent time, and we see that growing only from here.
Okay. Siddharth, so in India, of course, I remember, we started with the Nifty ETF. We had the Junior ETF, of course. What's been the journey of ETFs in India? What is the current size, and what's the kind of growth that you are seeing in this product now?
So initially in India, it was dominated by gold ETFs. I think till early 2010, it was gold ETF which was prominent in terms of AUM. But in last 5 6 years, lot of things have changed. So government have started using ETF to disinvest. EPFO and other provident funds are starting to invest in ETF to take equity exposure, and all these things have created a huge momentum in the space. And right now the industry stands at 2.11 lakh crores, which is huge, almost around 50% growth over last 3 years in terms of AUM. Also, one thing which has helped ETF to grow is the fact that large cap mutual funds are finding increasingly difficult to outperform the benchmark. So, for example, in last 3 years, if we look, Nifty 50 ETF itself has given higher returns than 90% of the large cap mutual funds. And people, especially the retail investors, have started to observe this trend. And while the segment continues to be dominated by institutional investors in terms of AUM, we are seeing more and more traction from the retail investors also.
Yeah, that brings me to the next question, Sarup, right? I mean, we have had ETFs for last 15, 20 years, right? And despite the fact that most funds are not able to beat the Nifty, why is it that the ETFs have not gained as much prominence in India as they have, say, in a country like US? And what makes you confident that this will change?
Anuj, I think though the ETFs, as you rightly said, have been in existence in India for the last 20 years, the growth of ETF actually saw the rise in the last 5 to 6 years. Some of the reasons you could attribute or contribute to, could be finally the government today uses the ETFs as a preferred route for disinvestment, and that has led to a increased participation from retail investors. ETFs are being used by EPFO and private PFs also to take exposure in the equity markets. And Siddharth sort of talked about the shrinking alpha having now coming into the fore. And when that happens, the benefit of plain vanilla ETFs and like the Nifty or the Sensex itself comes in front of the investors.
Siddharth, so since Indian market is still in a sort of a nascent retail participation, I know we are at record participation, but by global averages, we are still a country which where the equity cult is still developing. So in that sense, for a layman viewer, tell us the basic. If you were to explain to someone what the basic advantage of investing in an ETF is, would it be fair to say it's almost like buying the Nifty and just holding it? If you're buying a Nifty ETF, is that the simplest way to explain it?
I think one of the major advantage of investing in ETF is that you are buying Nifty 50 returns. For example, if investing in Nifty 50 ETF, you're buying Nifty 50 index to get that returns at a very low cost. Right now, the average cost of Nifty 50 ETF is around 8 basis point, whereas the cost of a typical mutual fund is north of 200 basis point. So that is the cost differential we are talking about. Also, one very interesting thing which is now picking up is you can buy and sell ETF at intraday levels. So, for example, if you're buying or selling mutual funds, it happens at the day and nav. But ETF, since it trades on exchange, you can buy it at 11 o'clock, whatever the index levels are at that point, at that particular level, and sell whenever you want at the again intraday levels. So all those things add to the attractiveness because as you rightly pointed out, there is a lot of volatility right now. So investor can generate some additional returns by using ETF by entering and exiting at the intraday levels.
Swarup, we hear about the cost angle of ETFs being lower. Why is it so much lower compared to say active funds?
You're not trying to beat the benchmark. So the cost of research is not involved. I mean, having said that, the role of ETFs are far more than just the low cost. Whenever we talk of ETFs, the cost comes in because it's far less work than on the active side. You take away the entire active backend that is put to beat the benchmark or the market. But here, your entire focus is to just buy the market. But apart from that, what we would like to really talk about is, apart from just the low cost, you gain from the intraday activity, which Siddharth sort of talked about. You could use futures or options as you can gain the same exposure via ETFs too. You can use ETFs to adjust your asset allocation temporarily to benefit from current market and economic environment. You can also do strategic asset allocation where ETFs form part of your core portfolio. See, ETFs give you access to international markets. So just the low cost, it opens up plethora of other things to form a core portfolio, part of your portfolio going forward. But I do agree that the low cost typically comes out whenever we talk about ETFs, which I think as it matures, this will become a part of the discussion of ETFs, but not the total one.
Okay, so low cost is clearly the one, but not the only one. The ability to invest in the index at any price, at your price, is the one. Taking advantage of steep market fall and buying in live market, getting the NAV of that moment, and not waiting till the end of the day. These are some very important points that you are making. So let's just carry this discussion forward. Uh, Siddharth, okay, that's for ETFs, but since we're talking about some kind of passive investments, are there other options apart from ETFs, or is ETF the only option?
No, there are actually three ways, predominantly using the fund route in which you can take the passive exposure. One is ETF, as we have already talked about. Second one, which is also prominent, is index fund, which are actually structured like mutual funds and they don't trade on exchange. So they give you same passive exposure by investing in the underlying index and can be bought and sold just like a normal active mutual fund, but they are not listed on exchange. The third way, which is gaining some prominence now, especially in India, is the fund of fund route. So, a fund of fund which invests in an ETF can be a way to get an indirect exposure in the passive space. And also, that is creating a lot of interest among the investor who do not have demat account, or let's say who do not want to let's say use a broking platform and pay the broking charges to invest into ETF. They are basically opting for fund of fund route to invest in ETF.
Okay, that's interesting. Swarup, let me get you in on this. So, if I were to use fund of funds, I'll have to call the fund house directly, who's offering me the fund of funds, and uh, tell that fund house to open a folio for me and put fund of funds. And can SIPs be done in that as well?
In the normal fund of, you're talking about active or passive?
That this normal fund of funds, the fund of funds that we're talking about now.
So Siddharth, that's a better question for you. If you can take that one.
Okay, let's Siddharth take this one.
Yeah, so
He's a product
fund of
expert.
fund, yeah, fund of fund is like a normal mutual fund scheme. As you invest in a normal mutual fund, either directly or through your distributor, you can similarly invest in the fund of fund. It works very similarly to how a normal mutual fund scheme does. And obviously, you can, since a normal mutual fund scheme has an SIP option, in the fund of fund also you have the SIP option. So I think that's a very interesting point that in ETF you're buying and selling through exchange, or you can also come to the AMC in a larger lot size. But if you want to do an SIP in ETF, a fund of fund is a way to do that in ETF.
Okay, that's fair enough. So, uh, Siddharth, in that case, which one is a better option then for me? Is ETF a better option or is fund of funds a better option?
That's a very interesting question. So actually, it actually depends on the investor. So if investor wants to take advantage of intraday market volatility, wants to enter into the market at a particular level and exit the market at a particular level, he's okay with the nuances of trading in ETF, like how the trading is done in stocks. I think ETF makes a very strong option for that particular investor because he can buy and sell and at the levels he want, right? But fund of fund, I think, will make very strong case for the investor segment which I talked about, who do not have demat account and who do not, let's say, use the broking platform to invest in a fund and, let's say, incur the broking charges. So for such investors, I think fund of fund will be a good route to take passive exposure through ETFs.
Swaroop, this is one question that I have for you now. Uh, the ETFs would be launched by the same mutual funds or same fund houses that have active funds as well, right?
Right.
So, and if active funds obviously have more fees, more costs. So, why would a fund house be tempted to bring out ETFs? Isn't it in fund houses' interest to actually keep offering only the actively managed funds?
Yeah, that's a question which I get asked very frequently. But I have a very simple view on it. See, we are product manufacturers. At the end of the day, we have to give a product which suits an investor's requirement. And as product manufacturers, we have to be very neutral to all sides of products. There are some products which we might want to do or not want to do. But to be away from this active and passive debate is fundamentally flawed. I do believe that there are two different sides of the businesses, not that one is going to do one side at the expense of the other. You can do both of them successfully. At the end of the day, it is the financial plan which will pick up a product. And if one of our products is getting chosen from either side, our job is to be to as much as true to label to the product, or irrespective of whichever side you are in. When you look at a threshold of where you stand in India or anywhere in the globe, the future is not exactly predictable, and from that perspective, it is always prudent for an asset manager to be present on all sides and provide solutions to the investor in the selfish interest of the existence of the finance of the asset manager is my submission.
So, Swaroop, Diversification is a key aspect of mutual fund investing, right? So, what would be your advice to investors? Don't invest in just one ETF. Get into perhaps Nifty, Bank Nifty, gold, perhaps commodities. What would be the advice?
Yeah, I think the advice is very simple. First, draw up your financial plan as per your goal. And then, as per the financial plan, the requirement of the underlying scheme comes. If you feel there are some areas where the ability of the active side is to beat the benchmark, pick up that side. And at places where you feel the low cost advantage can come up, and you are getting products on the passive side which you will not get on the active side. A case in point I always make is, if you look at the next 50 as a
Hmm.
product, those 50 stocks are not exactly available too much on the active side, even if you put across the categories. So you can bundle both sides to form a very interesting combination. You can start off, as if you are an active investor, you can start off by allocating say 25% of your portfolio to passives in the tactical way which Siddharth sort of talked about in the previous questions. What this 25% can do is it can significantly bring back your risk of underperformance of the benchmark. The other side is also possible, where you put the core of the portfolio, which is say the large cap or multi cap on the active side, and put that on the passive side as the Nifty 50, and go on to allocate the strategic side on the active side and build some benchmark beating abilities from the active managers.
Yes, I can tell you personally, the Nifty Junior ETF is something that I personally always invest in
Yeah, look
because
at the product, and it's
it's
not.
yes, please go ahead.
Yeah, look at the product and look at the journey of that product itself.
Ye- Yes, it's fascinating, and the reason for that I personally believe is that just when a stock is bottoming out, it gets thrown out of the Nifty, and just when a very high flyer is completing its journey, it gets included in the Nifty, and so so you get the best of the both worlds sometimes when you invest via the Nifty Junior ETF, and especially if you invest in big downtrend, you get the junior at perhaps much lower levels. Okay, we have just about a couple of minutes left on the webinar. So I'll take final thoughts from both of you. Siddharth, let me start with you. Your final thoughts on why you think this could be the product of the future.
ETF, as I've mentioned, that in India it is catching up, right? It is at that cusp where it can just take off. And now, since retail participation, especially retail audience, have started seeing that kind of benefit there is by investing in such a low cost product, which gives you market returns with a very known methodology and a transparent portfolio, I think there will be increasing demand from that segment also. So I feel that uh, while it is being accepted already in the institutional segment, there'll be more uh, upside, or rather more demand from the retail segment also. And we can also see the kind of products which are being launched in India now. There are almost 90 ETFs in the market. We are seeing products on the factor based ETF, on the ESG based ETFs, which are also going to come up. So the product basket is also broadening. The investors are now more aware about the passive investments, and the government and SEBI is also very keen to promote this segment. So I think all three will combine very well, and this segment will grow, I feel, very well in coming future. Also, just one more thing which I'd like to mention. We talked about funds of funds initially, that being one prominent route which is being explored in India now, and I think that will also catch up. One major thing is, in last 2 years, the taxation for fund of fund which is investing in equity ETFs have been changed. It is now taxed as an equity oriented scheme, so equity taxation applies. So an investor using the fund of fund can invest in, or rather can take exposure in ETFs without the need of demat account, or without being concerned about the liquidity of the ETF or the charges on the broking platform. So I think all these multiple routes which are coming up to provide passive exposure to the market will gain popularity over time, and we'll see more and more participation in this segment, especially from the retail segment.
Swarup, a final word to you then. 2.1 lakh crore is what is the size in India right now. Do you see it becoming a 20 lakh crore industry over the next 5 to 10 years?
Yeah, Anuj, the fact remains that the demography of India is changing and it will swiftly change. We've already known the underlying change in the age of people, and you cannot stop the digitization of the process once this demography changes. We're already seeing the underlying changes in the number of demat accounts that are opening, and add to the fact that the efficiencies of the market is also changing. When you bundle all this together and you look at the future, this is an eventuality. The way the young will invest will be dramatically different from the way I used to invest, because economically India will be a very different country when it comes to that generation. They will operate from the smartphone. They will not use the paper to invest, and they're already getting into the demat form. So all this leads to the simple product, and the power of the product lies in its simplicity. And will be the future. There is no doubt or debate in my mind. I'm not yet ready to put a number, because whatever number I had put on the active side itself was wrong by a wide margin. I don't think a number is an issue. The acceptability is the issue, and the turn can happen very severely. It's happened like that across the globe, and we are waiting, or we are on the threshold of that turn, is my opinion.
Okay, gentlemen, fascinating discussion. I myself learned a lot about ETF and fund of funds, and of course, we'll have a couple of more episodes on some other interesting aspects. But Swarup and Siddharth, thanks a lot for joining me on this special episode of Wizards of Finance.
Thank you so much, Anuj. Thank you.
Thank you, Anuj.
Mutual fund investments are subject to market risks. Read all the scheme-related documents carefully.